Yo traders, what's good? So this lesson is going to be on trends, even though market structure kind of covered trends. Not really, so I'm just going to break down, bullish trends, bearish trends, consolidation, how you can find a trend within a consolidation through different time frames, and trend lines. I'm just going to throw trend lines in this one too and show you what a valid trend line is, how to use trend lines, bloody blah. So let's get on to the charts and take a look. So use this chart today basically for most of the lessons I've recorded today because, okay, why not? You've got everything on your look: support, resistance, market structure. So yeah, we can clearly see this is a bearish trend. Why is that? Because bearish trends make new lows. So every time new lows get broken, we're in a bear trend, and every time our new highs get broken, we're in an uptrend. Now what happens when we get consolidation? We're not really making new highs and we're not really making new lows. Now, what can we do in consolidation and in ranges? There's two things we can do, all right? Just to say, this is pull it back to when price was like this, really ugly. You can draw more than one range too, okay? Because we can do this. So yeah, this is like the range. It don't need to be perfect, all right? Just know that price is not really giving us a clean direction. Just doing this shit. Now you can either scale down to a lower time frame and find a trend within the range, okay? So like every time it comes to the top of the range, we're looking for sells and trying to get in on a downtrend, and every time we're at the bottom of the range, we're looking for buys and we're trying to like catch ourselves little uptrends, okay? But instead of doing that, because it's just shit trading with inside a range, unless it's a really higher time frame range, right? Lower time frame ranges, they're horrible. Only thing we can really do is wait for a clean break to the upside, a retest of the consolidation box, and a continuation, or total opposite. Wait for a clean breakout, retest, drop. Now, yeah, we broke out, but there, what did we do though on a retest? Well, nothing yet. We haven't started a downtrend, so all we can do is watch. Okay, cool. There we go. So, I'm going to sneeze. Damn, my bad. So, yeah, we broke out to the upside, big bullish candle, right? This is what we like to see, nice bullish candle. Come back down, retested it. We could go to the 1 minute time frame and take a look now. This is a nice retest. Lovely little retest. And another lovely bullish engulfing big green candle that's bigger than the rest of them. And there's our uptrend. There's the start of our uptrend, okay? And I'm not exactly sure how far it's going to go, but this is why we go to higher time frames and we look for structure. So we just usually target liquidity, like I just showed you in the last lesson. We're just targeting places where we think stop losses could be placed. I didn't get there. Didn't get there, but what did it do though? Sweep liquidity from there, sweep liquidity from there, and then dropped. So let's just go back to our 1 minute time frame. Got ahead of myself there, my bad. So boom, we did actually come up. If we got in down there at that point, the closest liquidity would have been there. So, and then yeah, that's our uptrend anyway, out of a consolidation. Now let's look for when we go bearish. Okay, cool. So I'll tell you where we went bearish. We went bearish as soon as we broke this higher low there. Wow, what the fuck? This higher low there. As soon as we break that higher low, we're bearish. We are now bearish. There we go. Cool. So now we know we're bearish. So are we going to continue bearish? Yes, we do. So what can we do? Target liquidity. And yeah, I'm kind of glad I threw the liquidity lesson in there now. Stop loss above. And why am I so confident? I put my stop loss there and think, it's not going to come up and take me out. A liquidity grab from all of this, because it did just grab liquidity from there. So there's your high. It came, boom. Just took liquidity and have broken structure to the downside. So I'm quite comfortable thinking it's going to go down. Okay. And target liquidity. There we go. What did we do? People stop losses or below this area because, clearly didn't want to break any lower. So when we just start a downtrend, I'm going to be targeting the buyers who pushed it up. Stop loss. I'm trying to take them out. It's buyers versus sellers. Sellers versus buyers. Boom. Liquidity sweep. Probably going to start an uptrend now. No. Still carrying on down. Pretty strong. Whatever. But yeah. So that's a downtrend, uptrend, and a consolidation in one. Lovely stuff. So I think you understand anyway how to spot a bullish trend now and a bearish trend. But what can we also use when what can we also use? We can use trend lines. Okay, yeah, that's what I was going to say. So a lot of people argue how to use trend lines. Okay, 2 touches minimum before it becomes a trend line, 3 touches minimum before it becomes a trend line. Let's just take it back. So we know we just broke structure to the downside, so we're bearish. We're expecting a continuation. So what can we do? Place our trend line like this on the wicks. We can place it down to the bodies. Honestly, I don't really get too tacky with this. I don't give a shit. I literally just go like this. Like I'll place it from the wicks and the bodies, but you know, if I see a candle body close above the trend line, I'll start to think, okay, maybe we're breaking a bit of structure here. But if we break a trend line, does that mean we've broken structure? Not all the time, no. So anyway, what can I expect when price comes up and taps the trend line? Continuation down. Especially if it reacts like this and leaves a wick and doesn't want to break it. Definitely expect a continuation down. Expect though. That's the key word here, yeah? Expect. So you know, cool. You get a gist, yeah, you get a picture. Trend lines being respected. The trend line's being respected. Doesn't get broken yet. We haven't seen the trend line get broken. Let's look for example where a trend line gets broken and disrespected. Cool, there's a trend line. Very steep and not very pretty, but it's still a trend line, okay? So that's a trend line. Now you could draw it from the wicks and only the wicks, but you're going to end up with trend lines like this and ones that don't make sense. I genuinely would rather draw my trend lines from the bodies and then wait for a strong body close. So yeah, I would genuinely rather do my trend lines like this. And if we go to the 1 minute time frame, we can fix it up. You know, we can go down and fix it up a little bit. So let's go to the 1 minute, fix it up a little. Cool, nice. If we candle body close above this now on a 5 minute time frame, whatever, I'm looking for buys. Boom, there we go. Get in on that nice bullish candle. Target the top. So this is a good thing too. This is a good thing. So we can actually use counter trend lines, right? So instead of us like only putting a trend line in the direction of the trend, I just put a trend line in the opposite direction of the trend, right? This is a trend line in the direction of the trend. So I know it's respecting it. You know, we're respecting the bullish trend line. But also, there's going to be opportunities then for you to put a bearish fucking trend line where the sellers are pushing it down. Okay, boom. So yeah, we just tapped in. Like I said, a lot of people say as soon as you get 2 or 3 touches, then it's valid. Well, it touched twice there technically because of the wicks. So 1, 2, 3, 4. That's a valid trend line. That's a valid trend, a bearish trend line in a bullish trend, an overall bullish trend. So look, we know on a 5 minute time frame, the market structure is bullish. We're in a bullish trend, and we're likely to push up. So what can we do? We can wait for the break of a bearish trend line. Boom. Didn't officially break actually. Just keep it going. Boom. So we break through. My bad. Just broken through this bearish trend line in a bullish trend. Stop loss below structure. Target. Oh, fuck me. There's so much to target because of that big red drop. And yeah, whatever. We're just targeting previous structure and liquidity. And there we go. So we just basically put a bearish trend line in a bullish trend. So overall, we know on the higher time frame, the 5 minute time frame, we're bullish. Got a little bearish trend line. Boom, break of the trend line, in. Lovely stuff. So let's look on the 1 hour time frame. Oh, and look at that. We're actually overall bearish. So that big massive buy that we just made on the 5 minute time frame was in a bearish overall downtrend. So look, 1, 2. I count these 3. Yeah, I definitely count them actually, because why is my mouse is bugging out? So yeah, I'm going to count these. I'm going to make them a bit tighter. Boom. Look at all these touches. Lovely. So there's multiple touches, multiple taps. All right. Let's just go back to when it was doing that before these big moves happened. So we know we're in a downtrend. Beautiful. 1 hour time frame. We got a lovely downtrend. So we could go to the 5 minute time frame now and look for our bullish trend line. Here we go. Tighten him up a little bit. There we go. So we got nice touches there, and touches there. And when we break this trend line, boom, like that. Stop loss there. Go back to the 1 hour time frame and target the bottoms. Okay. Oh, look at what happened. Fucking hell. Liquidity sweep. Okay. So I would have been stopped, yeah. But let's take a look. Yeah, liquidity sweep. But this is why I wanted to teach you about it. So let's go back and understand. Cool. We got in on the break of the trend line. Faked us a little bit. Boom. But what happened? And what did I just teach? About liquidity sweeps. So yeah, load of people's stop losses resting above this area. What happened as soon as it took them? Give us this wick. Get rid of this for a minute. So let's just go back and concentrate on what we was looking at. So give us this wick. Look how the candle actually closed. Look at this. Remember now the opening, the closing, all this stuff's coming together. So it opened there. Get rid of this red one. The candle opened there. Got all the way up there, but closed back down there, showing us it's not that powerful. We just been faked out, whatever. We lost a little bit of money. But what happens next? Big red candle. Just confirming it was a liquidity sweep. Now we're safe to enter. So I became liquidity. I got stopped out by the smart money. And now I can move down. All because I know liquidity's been swept. And yeah, there we go. Look at that. But yeah, I just basically give you an example of how I would have been stopped out too. But the main, moral of that story, without getting too technical again, was counter trend lines. So counter bullish trend line in an overall bearish market, and then boom. So basically that's it for market structure and trends and trend lines. Because I don't want to give away too much and fuck up your head. This is the basics, and I'm assuming that all of you watching this are really at the start of your journey, or just coming back and revisiting and seeing if you could pick up on anything that you missed out on at the beginning of your journey and learn it a little bit different from me. But yeah, don't really think there is much more to it. About a bullish trend, bearish, range. All right, actually, there's one more thing we can cover. There's just one more thing we can cover, right? I didn't actually show you how to go to really higher time frames, like the 1 hour and the 4 hour. Let's do the 4 hour actually. Show you an example of a 4 hour range. So perfect. We have a range right there, yeah? Here's our range before it breaks out. That is literally perfect example of consolidation in a range. Now, what we're going to do, we're going to go to something like a 5 minute time frame. We're going to find trends within the range. So because it's the 4 hour time frame, we can still trade inside this. So we know we're ranging, but look at the trade. Look at the trends inside. So yeah, it is a range, but I can still see market structure on the lower time frames. So if you're looking at 4-hour time frames for bias and stuff and is ranging, don't be scared to get involved on a range. Just understand, right, I know I'm in a range, so when price comes to the bottom of the consolidation box, it's more than likely gonna create some sort of like trend line or something and give me an opportunity to get in on a break to the upside and target the top of the consolidation box. Okay, my bad. So yeah, there we go. Target the top of the consolidation box because you got in on a lower time frame. So there is trends within inside consolidation, but you just got to make sure that the consolidation's the higher time frame. So yeah, basically there's opportunities in ranges, but they're just, you know, they're ugly. They're not worth getting involved in. I'd probably just look for another pair or wait for your pair to come out of that consolidation, break the box and retest the box and then make a trend. Okay. So yeah, don't think there's anything else I can teach you about market structure and trend lines right now, and counter trend lines. That's quite a lot in one lesson. I'll be honest. That's quite a lot for a beginner course for you to learn in one lesson. Market structure, trends and trend lines and counter trend lines. So I think I've probably got your imagination going a little bit. But yeah, that's it for this lesson. I'll see you in the next one.